Hello and a warm welcome from my side. My name is Clemens Billek. I'm the CFO of the Kontron Group. Let me guide you through the results of the financial year 2023. Revenues grew by 15% to 1.2 billion. EBITDA grew by 15% as well to 126 million. The operating cash flow grew by enormous 163% to 117 million. And the net income grew by 36% to 75.3 million, resulting in earnings per share of 1.23 euros a share, which is the highest ever operating net income Kontron has achieved so far. The backlog stood at 1.7 billion at year end, resulting in a growth of 16% compared to last year. If we look at the geographical distribution of the revenues, you can see that 81% were generated in Europe, whereas 17% only of that is associated to Germany. Around 11% comes from Austria, and the remaining 53% is spread through a variety of countries in the European Union. 11% of our revenues in 2023 came from North America and 9% from Asia. If we look at the achievements and the outlook, you can see that the net income is higher than the guidance and the consensus of 72.3 million. After the net income growth of 36% for 2023, we expect another 30% income growth in 2024. We have closed 4 transactions in total over the last couple of quarters, including the Katek acquisition, which was closed in the first quarter of 2024, which was financed with a subsidized ÖKB loan. We've also closed the acquisition of Hartmann Wiener, active in avionics and defense, the acquisition of Comlab, a company in Switzerland active in the transportation and the trains business, and B Square, which was previously listed on a Nasdaq. All 3 acquisitions strengthening our software and solutions franchise, and the acquisition of Telit from Telit Interion with 5G modules strengthening our connectivity business. We are a leader in specialized IoT vertical markets with smart trains, aerospace, and green energy. With the launch of the Kontron OS operating system, we have offered a system with supreme security, our own Kontron grid with connectivity. We are a member of TechDAX and SDAX, covered by 8 analysts with an average share price target of 28.7. Looking at the KPIs for 2023, revenues grew from 1.1 billion to 1.2 billion by 15.3%. The gross margin grew from 340 million to 466 million by 26.2%. The EBITDA grew from 110 million to 126 million by 15.1%. And while we booked 1.2 billion of revenues, we had even more orders coming in, 1.5 billion. So the book-to-bill ratio was 1.18, implying a growth of 18% of new order entries compared to the previous revenues. The operating net income grew by 35.7% to 75.3 million. But given that we had 2 share buyback programs in 2023, the earnings per share grew even more by 41.4% to 123 cents a share. The operating cash flow grew by 163% from 44.4 million to 116.9 million. If we look at the Kontron Group balance sheet, the working capital stood at 190 million at the end of the 3rd quarter. It went down by 20 million in the 4th quarter, even though it's still up 55 million from the end of last year, still slightly impacted by the supply chain crisis. If we look at the equity, The equity situation is almost unchanged. If we take the treasury shares into account, we have bought back in the course of 2 buyback programs, 2023. The cash and cash equivalent situation is pretty healthy still at 332 million of cash on our balance sheet, despite 118 million of debt repaid in 2023 and 109 million of share buyback programs and dividend paid over the course of 2023. We look at the total net cash that improved further from 118.3 million to 121.2 million. And the equity ratio pretty unchanged at 44%. If we look at the cash generation in more detail, we had liquidity of 332 million at the end of the year, cash on hand. We still expect another 19 million of receivables from the Focus transaction to be paid out from an escrow account at the end of the second quarter. We had 130 million of lines available already before the Katek acquisition and took another 90 million of additional lines amidst the Katek integration. All in all, that amounts to around 600 million of liquidity after the Katek acquisition to be used only cautiously in strengthening our business. Comparing the cash generation or the operating cash flow, you can see that we had very high operating cash flow of 117 million in 2023. Even if we deduct 19 million for project which was paid out only in January of this year, but where we got the cash inflow already in 2023. And if we deduct those 19 million, we would still be just below 100 million with a very high operating cash flow. We had a cash conversion of more than 90% of EBITDA. We maintain our cash conversion target of 75% also for 2024. And we maintain our shareholder rule, spend 50% or close to 50% of net earnings in dividend and or share buyback programs. We'll propose a payout of 50 cents a share or 31 million, which will be the proposed dividend at the AGM beginning of May 2024. Almost all of Kontron's major KPIs improved in 2023. Revenues grew by 15% to 1.2 billion. The gross margin improved from 34.7% to 38%, with a target for 2024 of 40%. The EBITDA rose from 109.5 million to 126 million, even though it was burdened by one-time restructuring cost of the IT service business, would have been more than 130 million if those restructuring costs had not been incurred. The net profit of continued operation rose to 75.3 million. It's higher than expected net profit, 36% versus 2022. And the equity ratio stood at the same level despite the significant special dividend paid out last year. The working capital slightly increased, but it has been shrinking from Q3 already to the end of the fourth quarter of 2023. The operating cash flow increased significantly, as already mentioned, and the number of engineers rose slightly to 4,800. 2/3 of those FTIs are engineers. The net cash improved again from 118 to 121 million at the end of the year. For 2024, we expect a net debt of just below 100 at 95 million after the Katek acquisition, with a target to get back to net cash in 2025. Let's have a brief look at the Katek integration and the next steps to be taken. We have signed the acquisition of the majority stake in Katek SE January 18th, acquiring 60% in Katek for 129 million. We've closed the transaction end of February and started consolidation beginning of March. In March, we also took out a 125 million acquisition loan in order to finance the acquisition of Katek at favorable conditions. We will launch a tender offer at 15 euros a share and an alternative share offer mid-April. The tender offer will presumably run until mid-May, resulting in a delisting of Katek by the end of May. The integration of Katek will be completed at the end of the second quarter, presumably, and we expect new product lines, including software of Kontron, to be launched by the end of the year. The group gross margin is expected to be around 40% already at year-end 2024. Katek is a game changer for increasing the profit and revenues of the entire Kontron group based on Kontron technology. Let me show you the structure of Kontron Group after the acquisition of Katek. You see that we have added two new divisions, GreenTech, with expected revenues of around 330 million, and ODM with expected revenues of 280 million. Both divisions have been previously with Katek. And we have upgraded three divisions, Aerospace, with expected total revenues of 140 million, Global with expected total revenues of 230 million, and Industrial with expected total revenues of 670 million. The profitability targets for the segment Europe is an EBITDA margin of 10% and a gross margin of 35%. Global, acting as a sales channel for Europe and software and solutions technology, has an EBITDA target of 8% and a gross margin target of 30%. And software and solutions has an EBITDA target of 15% and a gross margin target of 50%. What is the investment rationale? It's complementary solutions. It's our intention to transform green technologies of Katek with our IoT software to bring them together. If we look at the gross margin of Kontron Group before the acquisition of Katek, we had a gross margin of around 38%. Katek had a gross margin of around 31%, resulting in a blended gross margin of around 37%. It's our target to get this gross margin to 40% by adding our IoT software and thereby adding security and enhancing the grid control, enabling remote maintenance of the Katek solar inverters, to make them smarter IoT solar inverters, and to the Katek EV chargers, making them smart IoT EV chargers with functionalities required by every user of a car who uses a wall box. We will thereby increase the gross margin by 5%. All in all, in total figures, around 30 million of additional net income. If we look at the revenue share of manufacturing services, you see that this is around 50%, while it only contributes around 18% of EBITDA. At the same time, GreenTech had revenue of only 43%, but contributed around 70% of EBITDA at Katek Group. We're going to strengthen the GreenTech products, also the aerospace products, with a significantly higher EBITDA margin. At the same time, we're also going to realize some cost synergies by benefiting from a favorable financing terms of Kontron, by only having one stock exchange listing, and by some administrative cost savings, but no major layoffs. Kontron has a very strong brain power in the IoT sphere with around 3,600 engineers, including Katek. We have developed our own Kontron operating system with the highest security standard, remote maintenance, and remote control opportunity. The Kontron grid connects up to 1 million devices to smart grids. It's our target to install Kontron OS on all Kontron, but also other IoT devices, becoming a Windows for machines. We've also launched several projects with regards to artificial intelligence enhancements using Halo chips for customized scalable applications. The projects we have embraced so far in artificial intelligence include video surveillance, defect detection, and robotic solutions. It's our target to get our IoT applications smarter and simple to operate. We are the leader in mission-critical control systems for high-speed trains, providing European Train Control System Level 3, and enabling our customers, the majority of all European providers of railway solutions, with the new FRMCS standard, which will accelerate the migration and requires 5G. The GreenTech IoT software will empower solar systems connected to the IoT grid, providing smarter homes, and we will provide smart e-mobility charger connected to the grid as well, with the help of Katek. We're also a relevant player in aerospace and defense, providing mission-critical VPX, high performance for defense modules, and with our operating system installed already on 4,000 planes. The history and the forecast for 2024 show a continuous strong growth of revenues and net income. We've by far surpassed the profitability of the previous years, and it has proven that the decision to focus on IoT only was the right decision. The result for 2023 yielded a net income of 78 million, including discontinued operations. The guidance for 2024 forecasts revenues of 1.9 billion and a net income of 100 million. Thanks a lot for listening, and I'm looking forward to staying in touch with you. If you have any questions, please reach out to me at ir@kontron.com. Have a great day. Bye.